Well, all eyes were on those better-than-expected CPI figures, but it was better news for some sectors than others. Marcus Padley from Patersons Securities was watching the action. Well, Marcus Padley, sizable moves in interest rates in the bank bill market and in the Australian dollar after those CPI figures. What happened to the share market?
Well, it went up ticky, which was thanks to the banks. Resources went down today. But whilst everyone's supposed to be cheering interest rate cuts, and this inflation figure looks like it might kick off a series of rate cuts, and there's a 66% chance of a 50 basis point cut next week now. Although that might sort of cheer the markets, what really went on today is that everybody in term deposits is seeing their returns dwindling away, and all the stocks that went up today were basically income stocks. You had the property sector going up, which of course is interest rate sensitive, but noticeably retailers didn't really go up, but the banks did, and banks have all got their dividends coming up, not all of them, but most of them, with the results coming up next week. This has been, this is a time to dust off your income portfolio in order to get a better return than term deposits, because everyone's going to see those returns whittled away now, and equities some particularly safe equities are now the alternative.
Yeah, it is. Sure is swings and roundabouts. All right, to some stocks. The Canadian-based Brookfield last week launched a $400 million bid for property group Thakral Holdings. Now, Thakral has come back today with its initial response. How strong a defence can it mount, do you think?
Well, not a very strong one. They've got a net tangible asset value of 96 and the bid's at 70 cents. But Brookfield, knows what it's doing, and judging from the fact that Thakral's got itself into a bit of strife with a loan which was bought by Brookfield, which gave them a 38.6% stake, from which they've launched this bid. Brookfield are $150 billion Canadian investor in these sort of assets. They know what they're doing. They've got Australian hotels already. They might just be the better alternative. The Thakral family, of course, has a huge stake, and they just may see their future, better off with Brookfield. So we'll see what happens. But the interesting thing is the Canadians, they're a bit like the Australians. Their currency's up, and they're about the only people in the world actively going and buying stuff.
Now, another nasty surprise for shareholders of PMP. Profit downgrades are beginning to be a bit of a habit.
Certainly is. Well, who would be in print media? That they're printing stuff, advertising stuff, and distributing it, and they have seen a drop off. What's happening is we've got to the end of the March quarter, and everyone's having a look at their end of March quarter numbers and realising they're not going to hit their full year numbers or their half year numbers. We've had profit warnings, from Bradkin and Boral. Same thing here. 30% downgrades you'll see in the numbers tomorrow. And it's a pretty shabby sort of reflection on what the advertising market's like, and there are loads of stocks exposed to that. I think sort of APN was down today, 2.4%, 10 Network 1.8%. A pretty poor reflection on everything, really.
Sounds like we're the only ones on holiday. Marcus Padley, thank you very much for joining us.
My pleasure, Tiki.